session outline, and then we can begin. So I'd like to take this moment to say hello, everyone, and welcome to the Partner and Focus session between DIA and UnshETH. These Partner and Focus sessions are a series we've launched to bring more visibility to the partners within the DIA ecosystem, to explore their products, and to highlight the technical collaboration occurring between them and DIA. And for those of you who are joining us for the first time or are unfamiliar with DIA, DIA is a cross-chain data and Oracle platform specializing in the sourcing and delivery of customizable data feeds, both on-chain and off-chain. More specifically, DIA's data offering comprises cryptocurrency price feeds, NFT floor prices, fair value feeds for liquid staked tokens, random number generation, and more. And all of DIA's feeds can be accessed across over 38 different blockchain networks. Today, we are welcoming one of DIA's recent partners, UnshETH. UnshETH is a diversified liquid staked ETH basket that earns staking ETH yield and swap fees, all wrapped into a single ERC20 token known as UnshETH. On behalf of UnshETH, we have here Wagmi. Wagmi, you already checked in, but how's everything going today on your end?
Hey, everything's going good. Thank you for the warm introduction. So my name is Wagmi. I'm the protocol lead over here at UnshETH. So I'm one of the core contributors, one of the lead engineers, as well as helping do like outreach on this topic. Super excited to be here to discuss UnshETH, discuss the state of LSTFi, the liquid staking market, as well as how DIA fits into all this.
Excellent. Thank you so much. Really excited to get into all of those different topics. And before we dive into UnshETH and learn more about what you guys are building over there, let's dive a little bit into Wagmi yourself. Can you give us a little bit of background? We always just like to get to know exactly who we're speaking with. Maybe how long you've been in crypto and what got you started in this space?
Awesome. Yeah, sure. So actually, I'm probably on the little bit older side for folks in this space. It seems like pretty much every DeFi founder nowadays is like barely out of high school or something like that. But I come in, essentially I got into Bitcoin and crypto all the way back in 2013, I would say. That was this time when my friends and I we used to play a lot of online poker, and there was a day in 2011 where pretty much all the online poker sites got shut down, and for some reason, starting in 2012, 2013, everyone started talking about this thing called Bitcoin, and you could use Bitcoin to go play online poker, and that was like sort of the first time when traditional banking rails were shut down and Bitcoin was being used as a currency alternative. I didn't really know what it was then. I was sort of just playing around with it. I probably did my share of like buying pizza with Bitcoin. Uh, and really, that was my introduction to the world of crypto. And between then and sort of 2019, I spent the majority of my career in traditional finance. So I was working at a hedge fund, basically large macro hedge fund. I was kind of like a quant and overseeing systematic trading, portfolio construction, things like that. Uh, did that for a while and really sort of left that in 2019 and jumped back into crypto, sort of right when DeFi summer was kicking off. The idea here was, I had sort of built a lot of like quant systems and automated trading systems and stuff in traditional finance, and DeFi was sort of the perfect playground to go and automate all this because it was just cool stuff, right? Like you could write code and it just works, and you don't need to worry about things like setting up databases or all the technical infrastructure that you would need in traditional finance. Data was free. Basically you could go hit up a Binance API and everything is free. You don't need to pay tens of thousands of dollars to Bloomberg or something like that. And really, I thought there was a lot of new and exciting technologies being built. I mean, I think this is when Uniswap first came out. That was like quite innovative. And then you had like a million Uniswap forks on every single alt L1 in 2021. And then probably the most exciting DeFi protocol that I saw around this time that I thought was like truly innovative and sort of really embraced the ethos of DeFi was GMX, which is a perps platform on Arbitrum. I'm sure everyone here is pretty familiar. So I was like systematically trading, doing like DeFi, CeFi arbitrage between GMX and other venues. Uh, and through all this work, I started contributing to a number of DeFi protocols, uh, you know, uh, including folks like GMX, and uh, that's when I really like dove headfirst into DeFi. Did a lot of like white hat work, um, basically trying to find bugs in the code and trying to benevolently find like issues and ways for improvement, and that led to sort of like gig opportunities like contributing to DeFi protocols. And yeah, earlier this year, in January, UnshETH was built. So basically, myself and the co-founders of UnshETH, we had this idea that this ETH liquid staking space was really about to explode, because um, starting in March of this year, when you staked ETH, you were now able to withdraw it from the network level. So this was called the Shanghai Chapella upgrade. And really, the thesis here was once that happens and people see that like ETH staking basically works, and you stake your ETH, you can unstake it and sort of do all this. Everyone's going to want to stake their ETH because earning, like basically when you stake your ETH, you help secure the network and you earn staking yield. So why wouldn't you do it? And especially with liquid staked ETH, what you can do is earn that yield and still use liquid staked ETH as collateral throughout DeFi. So it's basically like so coming from traditional finance, the analog that I always saw was like, when big banks are like trading with hedge funds, and you trade like derivatives positions, you're often collateralizing it with not dollars in the bank, but with T-bills that are already earning staking yield or whatever interest. So in the case of DeFi, or what we call now LSTFi, you can actually use liquid staked ETH as collateral throughout DeFi, and it's already earning yield, already helping secure the network, and you could borrow against it and do other things with it. So really, the idea behind UnshETH was to unlock the utility of staked ETH for everyone, make it easy for people to come deposit their ETH and stake it in sort of the best. Basically, we wanted to be the best place to go stake your ETH. So that was really the idea behind UnshETH. Yeah, I guess I'll pause there, and then we can get into a little bit more about what is UnshETH. But that's a little bit of my background.
That's great. No, I really appreciate the comprehensive background. We love to understand where people started, how they got involved in the space, and then better understand, the steps they took to contributing or co-founding or whatever it be, the project that they're working on now. I always find it really interesting and kind of funny how the real OGs sort of got into Bitcoin accidentally, as you mentioned, and then, once you realize the power behind the asset and the innovation happening behind the scenes, you stick in and you stay on for the longer term vision. So I always find that to be of interest. And so let's let's now stay on this topic of Unsheath and dive into exactly what the product being built, at hand is. So as you mentioned, you gave a great narrative of how you saw that the Chapella upgrade would, really sort of create more adoption of staked assets across different protocols and across different use cases. And so, can you dive into sort of how this relates to Unsheath? You said the idea was to unlock the utility of staked ETH with Unsheath. Can you give us some more background on the product itself and exactly what you're building?
Yeah, great question. So when you stake your ETH, right, like as a user, you have many choices on how to go about doing that. So you can either stake it at home yourself. You can sort of stake it with a centralized exchange like Coinbase, or you can do it with a DeFi protocol like Lido or Rocket Pool. And basically, if you look sort of earlier this year, when we launched UnshETH, really the dominant player in terms of like staking your ETH was Lido, and probably had like over 90% market share in terms of liquid staked ETH. And that was closely followed by Coinbase with like another 5 or 6% share, and the remainder was made up of Rocket Pool essentially. So there were only like three players. There was a new player on the horizon, which was Frax Finance. They launched their own liquid staked ETH product called Frax ETH, and that was sort of the fourth entrant. So that really was like a four-player game. And what we anticipated with Unsheath is that um, basically there's going to be a lot more newer LST protocols coming online, because basically it's just not a good idea to have like 90% of liquid state ETH like controlled by one entity, even if like the validators that they use are diverse. You're still like exposing yourself to the protocol risk that, like, if Lido goes under, it's kind of like a systemic risk. So the idea behind Unsheath is to offer a diversified basket of staked ETH tokens. And the analogy to TradFi here is like, if you're going to go take your cash and, sort of try to earn interest on it, you wouldn't go buy like, you wouldn't go put all your money into like Apple commercial debt or something like that, even if that seems super safe, because who knows what might happen. So really, like, I think of Unsheath as sort of like the money market fund of Ethereum. And like really, it's like a diversified basket of all the staking options, or liquid staking options rather. Um, yeah, so when we launched Unsheath, yeah, Frax was pretty small, and then I think we got like 5 or 10% of Frax TVL within Unsheath and helped them scale. And then now, at this time, we support, I'll say, 7 different liquid stake tokens. So it's basically Rilo, Rocket Pool, Coinbase, Frax. We added Anchor ETH. So Anchor is the OG LST protocol from 2020, but sort of never really got too big. And now they're, with the LST wars upcoming, they're sort of rebranding and scaling. So we're helping them scale there. We have a new entrant called Swell. So Swell ETH, that's now part of the Unsheath basket. And then most recently, we added Staters, ETHX, which is Stater Labs is another like sort of OG liquid staking protocol, but they've been active on other chains beside Ethereum. And just last month, they launched their ETH staking product. So we'll be adding them into Unsheath, I think, this week. Uh, so, so yeah, I mean, so basically the idea is for Unsheath, you stake your ETH with Unsheath, it's as though you're staking into the entire basket of all these different liquid staking protocols. So you don't have to be exposed to the protocol risk of every single one of them. And then you're essentially earning the weighted average yield between all of these. And then additionally, as an additional feature, we realized that all of these LSTs are struggling to scale liquidity. They're incentivizing curve pools between LSTs and ETH. And really, we thought that it's not super efficient to subsidize a ton of liquidity against sort of native unstaked ETH, because all that ETH is sitting in the liquidity pool, is not earning any staking yield. And since the Chapella upgrade, you can pretty much withdraw any LST into native ETH within 24 hours. So what's even the point of having all this like unstaked ETH liquidity sitting out there? So what Unsheath does is actually it's itself a liquidity pool that facilitates liquidity between all the different LSTs. So users can swap between different LSTs using Unsheath as a liquidity pool, and any user holding Unsheath earns not only the staking yield but also the swap fees associated with these LST swaps. So as a result of this, by simply staking your ETH with Unsheath, you're earning basically staking yield plus swap fees and other fees. So as a result, you've been consistently beating the ETH staking by just staking your ETH with Unsheath. So that's kind of the core product. Let me pause there.
I appreciate that a lot. And you went in and out a little bit there at the end. So I just want to clarify and make sure we understand. So you're earning obviously the yield off the underlying assets that are within the basket, but you're also earning swap fees on top of these assets as users are trading in and out of them. So in essence, you're sort of creating different opportunities for more yield on top of this basket exposure. I think it's certainly essential to have this type of basket exposure products for LSTs in this space as you're diversifying and furthering the decentralization of protocols within this space, which are securing liquid stake value and staking value, but also reducing the risk to your end users by diversifying their exposure to the underlying protocols. So definitely think that these types of applications are really valuable in furthering this space. I want to quickly ask you, you mentioned one thing that is a term I haven't heard yet on any of our liquid dialogues or partner and focus sessions, which are you referenced the LST wars. Um, we're familiar with like the some of the other wars that have happened, right? Like we've had the curve wars and whatnot. Can you give us some insights into what are the LST wars?
Yeah, I mean, this is sort of this emerging narrative that I'm hearing, but basically, look, at the end of the day, everyone wants to be a liquid staking provider because it's like staking ETH is like pretty easy. It's like an infra business. You just spin up a bunch of nodes and like just have the right security in place. And once you have that infra in place, it's like fairly easy to run and it's very, very scalable as a business. So everyone wants to get into this business because it's sort of like it's almost like a software as a service business model where each incremental user doesn't cost that much. Once acquired, you sort of just keep it, and it's just recurring revenues forever and ever. An incredible business to get into, rewarded by the market with very high multiples. So a lot of it is a game of user acquisition and keeping the user. So what LSPs have done traditionally is acquired users through a lot of driving incentives to go stake the LST with them. So basically, offering airdrops or token rewards for users using the LST in DeFi applications. Um, and yeah, like this idea of the LST wars is essentially the transition from like just giving straight token incentives to really like pay for play on various integrations that they have. So one thing that we tried to do with UnshETH is allowing LSTs to come in and offer incentives to grow their target weight in the UnshETH basket. There are other protocols that are like sort of about to do this, but not really. So, for example, EigenLayer, which is a place where you can go take your LSTs and restake them to secure other networks. EigenLayer started out with sort of the three biggest LSTs, and now they're in the process of adding another LST that'll be eligible for restaking in the EigenLayer network. And basically, the way in which they're going to choose which LST will be added is based on a bunch of people in the community voting for which is their favorite. So right now, it's just votes, and you know how votes go. They essentially get monetized, bribed, financialized because it's worth something to the LST, so they'll come pay for it. So, um, yeah, another example is like referral programs. So I think like Binance's ETH was doing this thing where if you go integrate, wrapped Binance ETH and like drive TVL into it, then essentially each dollar that you put in, you get like a referral feedback through your contract. So there's like different ways of doing user acquisition. And I think like uh, these DeFi protocols are now taking more like call it Web2 strategies for user acquisition. But yeah, I think we will see this like LST board narrative coming up over the next few months.
I appreciate that background on the LST wars, and you're right. We see as competition becomes more fierce across different categories in the space. Within different chains launching, we see that they are giving out, airdrop incentives, and in order to even keep up and gain, users and liquidity on your network, it seems almost like this becomes an expectation that you have to do this. So, I mean, we're witnessing all of this. Sort of like these case studies in real time for competition. For me, it's part of what really makes this space exciting. So I really appreciate your insights on that. I want to dive into what you at UnshETH are doing to evaluate and the different criteria that you have in place for which assets, or rather which LSTs, to select and onboard for the basket exposure that is underlying UnshETH. So, I guess in other words, what is the framework or the different criteria that you use to evaluate onboarding new LSTs within UnshETH?
Yep, good question. Yeah, so at a high level, we just want to make sure that like we're doing sensible things. That like obviously, like at the extreme end, we can say, the we'll accept any LST, and then like whatever, uh, your friends make an LST in their mom's basement tomorrow, like run a bunch of servers in the basement and say like, okay, I have an LST, and then try to put it into unsheath, and like it obviously creates a lot of risk for the basket if it's not properly evaluated. And so we have some like backstops around this. I would call it like reasonable checks, and then beyond those reasonable checks, we let the decision on how to add an LLC be driven by our decentralized governance. So the way this works is essentially um, we have whitelisting process to add a new LST into the unsheath basket. And the high level rules we have are essentially something like no new like newer LSTs can't be added with more than a 5% weight, which sort of just means that like if you're brand new, you come in at a low weight and we'll conservatively scale you up in line with governance votes and in line with the growth of the protocol itself. And then additionally, our other high level rules are essentially stating that like no more than 10% of the TVL of the particular LST should be in unsheath. And essentially, this ensures that um, basically we don't want a brand new LST coming around and 100% of it is coming coming from unsheath, as it sort of creates like conflicting incentives. Um, So basically, the idea is we want to help you scale, but we don't want to be all of your growth. We want you to have liquidity outside of unsheath, things like that. But yeah, I mean, beyond that is just like the obvious stuff. Make sure okay, it's like a legitimate protocol. They have like reasonable, they have like their standard set of audits, security audits. Ideally, withdrawals are live or very close to being live, or there's a clear roadmap to being live. Or if withdrawals aren't live, there's sufficient on-chain liquidity to support the size of the asset that we'll have in unsheath. Yeah, it's just like the basic like underwriting things that like any sort of lending protocol would do, but we sort of have this like LST twist to it, which is evaluating things from the perspective of, you know, how does a liquid staking token work?
Excellent. I appreciate that. So, you're having these high level guidelines and rules in order to ensure, on a high at scale, the protocol, maintains this sense of security and decentralization in terms of the assets that you're exposing your users to, via the unsheathed token. But other than that, it's decided by governance. So let's stay on this topic of governance. So for governance and within the tokenomic structure of your protocol, you use the how do you phrase it? Is it USH or it's USH token?
Yeah, I've heard it different ways. I call it Ush.
Right. I
I've heard
understand because
Oosh.
we get that all the time as well, right? Because some
Yeah.
people say DIA, some say DIA. I go with DIA, but again, when you're working with a DAO or a decentralized protocol, it's really up to whoever's interpreting the name. So I get that. Yeah, so let's talk about that a bit. So USH, I'll say, is the governance token and incentive layer for Unsheath. Can you give us just a little bit more details on this topic? What is the role of USH as it relates to the tokenomic structure of the protocol?
Yeah, so essentially, Ush is the governance token. What this means is that Ush token holders, or token stakers rather, had the ability to govern various parameters related to the Unsheath protocol and the Unsheath DAO. So specifically, so Ush token holders govern which LSTs are in the Unsheath basket, like what their target and maximum weights are, as well as various protocol fee parameters, such as what are the swap fees that we charge, and what share of the protocol fees should go to token holder, should go to the treasury versus like right now basically all the fees go back to unsheath stakers or unsheath holders rather. So that's sort of the like goal of Ush, and then in addition to that, we also use the Ush token as the incentive layer, which means that when we have partnerships with various lending protocols or dexes, we give out the Ush as farming rewards for users who are bootstrapping the liquidity on those protocols. So in the same way that like pretty much any LFC would give their Lido tokens or Rocket Pool tokens to grow them in DeFi. So that's really what it is. Um, yeah, from a governance standpoint, what this opens up the possibility to is like similar to the curve wars where people essentially um, drive incentives to curve voters in order to grow liquidity for their particular pair on curve. Similarly, for us, we work with LST protocols, and LST protocols provide incentives to include their LST into the unsheet basket. So right now we have Anchor, Swell, and very soon Stater Labs ETHEX, which will be providing co-incentives to essentially our governance participants. So yeah, that's really how the token works.
Great. Thank you for that background, Wagmi. And next, I want to transition into a question regarding the DIA Oracles integration. Can you add some context into the role that DIA Oracles play with regard to Unsheath and why you selected DIA as your Oracle provider for this component?
Yeah, so I guess the one thing I didn't mention earlier is that unsheath, in order to bring the accessibility of uh, staked ETH to the masses, what we decided pretty early on is we would pursue an omni-chain first strategy. What this means is, so when someone launches a new LST, they obviously have to be on mainnet Ethereum first because it's staked Ether, so it has to be an Ether L1, and then oftentimes once LST scale, they go into L2s like Arbitrum, Optimism, and so on. It's fairly difficult for them to go scale on these L2s because then they have to go subsidize because withdrawals are typically not live on L2s, so they have to subsidize like perp pools against ETH on L2s or whatever. So it becomes like efficient and very difficult smaller L2 protocols to. So the idea behind Unsheath is like you come stake your LFT into ETH, you'll bridge Unsheath onto layer 2's there's Arbitrum and Optimism and sort of make it more efficient for everyone involved. Because there isn't like many LST to ETH pairs. There's just Unsheath to ETH pair on on like an Arbitrum, and then everything else sort of works from there. So that's really the idea behind our omnichain first strategy. And so right now, Unsheath is live and fully working with incentives and integrations on mainnet, Arbitrum, and BNB chain. And additionally, just this weekend, we started the process of launching, and I guess like we're technically live now on Optimism, Base, as well as Tenet chains. And yeah, I mean, probably like our biggest area of growth right now is on Arbitrum. That's really like where we're focused, and obviously DIA Oracle being live on Arbitrum gave us a great opportunity for us to work together. I think like the DIA, I would say, has the ability to customize their oracles for the types of liquidity pools that Unsheath has. So we have liquidity on mainnet Ethereum as well as Arbitrum for Unsheath, and DIA was uniquely able to like include all these liquidity sources in coming up with the price oracle for Unsheath. And basically, what we're using DIA oracle for, especially on Arbitrum, uh, we have a number of lending integrations planned. So you can use Unsheath as collateral to borrow against. And for all these integrations, they require price for Unsheath against USD. And that's what the DI Oracle provides. So it's like very, I would say, stepping stone in our path to scale Unsheath utility platform.
Yeah, thank you for that background. And I agree. I feel like oracles within the LST5 space is either an opportunity or a hurdle, right? I feel like many teams are at this juncture where finding the correct oracle in order to support their asset is really crucial in furthering the utility that that asset has across different DeFi protocols. And so that's really one of the reasons we've placed such an emphasis on building out our LST pricing feeds at DIA. I think maybe one thing I could add here from our perspective in terms of why we're able to uniquely support assets such as Unsheath and other liquid staked assets is that often and even when we look at Unsheath as an example, a lot of, as you mentioned, a lot of the markets where Unsheath is being traded is on various dexes. And so as DIA at DIA, we source our trade data first party directly from these various decentralized and centralized exchanges. And so we're able, as you mentioned, to sort of isolate and capture trades based on individual pools which are existing across these different dexes. And so, for within that architecture, we're able to create resilient price feeds for assets such as Unsheath that are trading across, Maverick, Pancake Swap, Balancer, and other various dexes as you guys are. But I really appreciate that background. And as you know, we share your cross-chain focus. So while we're working together on Arbitrum so far, I'm excited to see where we can continue to take this and continue to expand across chains with our collaboration here. So thanks for that background, Wagmi. I want to, there's one thing you mentioned at the beginning of the call, which was diving into some insights about where we're headed within LST5, right? Looking forward. So maybe as we transition into maybe the end of this call here, we get towards the end of this. Let's look into the future. First, I want to get your insights into like what are you excited about when it comes to LSTs and LST5. We saw such a boom of different LST providers, and now we're seeing such a boom of LST assets, as you mentioned, which are either in the form of indices or assets which are collateralized by LSTs. Are there any innovations right now within this sector that like particularly stand out to you that are exciting, or anything that looking forward needs to occur in order to usher in the next wave of adoption? I know I'm kind of shooting a lot of different questions at you, but like either what are you excited about or what is needed to excite you as we look forward?
Yeah, great question. Actually, I have something very specific in mind, and it's like relates to you guys quite well, although maybe it's a little competitive. But essentially, the idea behind Unsheath was, when we're sort of valuing the different LSTs that are in Unsheath, and we're deciding at what rate to mint and redeem Unsheath, we're relying on sort of how much ETH backs each LST, which is a different answer than what is the market price of the LST on the DEXs. So DIA Oracles helps us answer what is the market price of an LST based on its on-chain liquidity, on-chain prices, and like the price in which I could liquidate a particular LST today. And that's a very important answer for lending protocols and other DeFi integrations. However, it's not like a super reliable or super important answer when deciding how to value a LST that has withdrawals live and can be withdrawn in 24 hours and has some buffer and things like that, right? So to value those LSTs, we sort of want to look at how much ETH is staked in the consensus layer. So Unsheath does this today based on sort of the sort of what is reported by each LST in its contract. So it's called a contract rate. Essentially, the idea is you can go look at how much ETH backs each LST and come up with the LST to ETH conversion rate based on that assumption. And then as long as there's not like meaningful slashing, or there's not some other sort of the withdrawal queue isn't super clogged, then that's a fairly reliable estimate that doesn't require a ton of on-chain liquidity to get to. Um, yeah, let me pause there. Does that sort of align, make sense?
That absolutely aligns with us. And I'm really glad that you touched on this. This is absolutely one of our, approaches also to the pricing of LSTs is looking at the collateral health on the contract level. So as you mentioned, LSTs, while they've quickly become the largest category by TVL in DeFi overall, many of them are still illiquid and infrequently traded. And so you can't always create market-based price feeds for these assets, right? Especially a resilient market-based price feed. So we are really much in agreement with your approach here. This is an approach we've taken as well, with basically providing what we refer to as fair value price feeds by looking at the collateral ratio on the protocol level. And for those in the audience, maybe I can break this down with a little bit of an example, right? So say that you have an asset. Let's just take like a very like blue chips staked asset in the space, right? So let's say staked ETH, ST ETH. Basically, what we're looking at here in high level simple terms is to what extent is ST ETH backed or collateralized by ETH on the contract level? Or, and this can be applied for any other liquid staked derivative or token. And by looking at that as Wagmi kind of expressed, we can get an idea of what the value of this asset is in the case of a mass exodus, right? Let's say everybody goes to redeem their staked ETH at once. What percentage of that of the underlying ETH will they actually be able to access given the collateral ratio on the protocol level or on the contract level? So I'm glad that you brought this up and really agree with you guys in terms of sort of this also collateral based approach to pricing and looking at the health of different liquid stake tokens.
Yeah, cool. So, yes, just following on that. So, right now we rely on the contract rates. So, basically, how much the collateralization is as reported by the LSTs themselves, because there isn't such a great way to sort of bridge the consensus layer onto like what we traditionally see, like the mainnet L1, L2s. So, we've actually at UnshETH been working with a uh, I don't want to like name the name, but essentially we're working with like a startup who's been specializing in this thing, and what they make is these ZK oracles that essentially look at the validator balances based on the public keys that they put out, and they can actually go in a completely decentralized and trustless manner, where you don't have to trust the LST provider. You can go look at like all the validator balances that they have and add them all up to come up with the estimate, as you were saying. And then they're able to then push that onto any chain, right? Like either mainnet or Arbitrum, or they could also give that information to an Oracle provider like a DIA, and then you guys can incorporate all that information into your fair value estimate and look at differences between that and say like the reported rate by the LST to come up with a little bit more robust estimate of what these LSTs are worth. So that's something that we've been developing, these like ZK oracles for like the LST valuation, um, which is like, it's fine. It's like, it sounds cool because it has ZK, but like, okay, cool, you came up with a slightly better oracle, like who cares, right? Uh, so I think the real advantage of this and the real utility unlocking that you get from this is now um, LST5 protocols, lending protocols, can use these types of oracles as opposed to market price based oracles to accept collateral for lending purposes. And what that unlocks is essentially the long tail of LSTs, the ability for LSTs like UnshETH to be integrated everywhere by sort of changing the underwriting and sort of the collateral valuation paradigm. So now you don't need an LLC to have $100 million in TVL and have a chainlink oracle in order to get listed on lending protocol and unlock its utility. All you need is a publicly available validator set, withdrawals live and working, and like generally good, legitimate, like secure protocol. So this actually enables like a lot of these newer technologies like distributed validator technology, or also known as DVT, and a number of other liquid staking protocols. There's like MEV protocols, all these other ones. And as these new ones come up, we can sort of unlock their utility very quickly by changing this valuation paradigm. So yeah, that's I think like what's up on the horizon and going to be very exciting.
Excellent. Well, that definitely attests to sort of what we're working on, and it's great to see that that's sort of what you're excited about as we look forward into the future of LSTs. I think it's really interesting because we're discussing this category of this sort of like newer innovation in sector of crypto that's become so sorry if I went out there. That's become so popular over the last year. And from my perspective on the Oracle side of things, I just love to see how it's prompting and like creating innovation within the Oracle side as well. And as it relates to other areas within DeFi, how one new sector is creating innovation across the board. And really, I think that's what's exciting about oracles. Like, is that as we continue to advance and look forward, there's more use cases and there's more different types of Oracle architectures that are optimized for different use cases than we are already aware of now. So it's really like this forward-looking space that we're existing in. That it's like how can we continue to support different assets across the board? And what you touched on there was really neat in terms of covering these more long tail LST tokens, and not needing this deep liquidity in order to access and support the adoption and the access to these tokens across different DeFi protocols. So glad we got to dive into that there. That was a really exciting part of the discussion, Wagmi. Thank you. And I want to be conscious that we're coming up on 45 minutes here, and sort of move into the end of our discussion and ask you, we just looked forward for the future of LSTs from your perspective. Maybe let's address quickly. I was actually going to say unsheaths, looking forward for unsheath, but you referenced that, this is something you're working on as well as the pricing of these assets. Is there any other upcoming milestones or events that on unsheath's roadmap that we should be looking forward to?
Yeah, great question. So yeah, I mean, we're going to be partnering with one or two different lending protocols that are being built right now, and sort of this ZK Oracle tech that we built in partnership with this other startup. We're going to be essentially uh, helping build this tech out with these lending protocols, and sort of the benefit to unsheath will be that we will be sort of day one collateral on these lending protocols. So I'm advising one of these right now. It's called Unstable Protocol, but it's yeah. I mean, look, there's this one. There's Savvy on Arbitrum. There's a couple other ones that we're working on that are essentially waiting on these like oracles that sort of value unsheath based on the ETH backing all the LSTs and being able to be available cross chain. So that's really like the next phase of growth for us, which is really like rather than waiting on like other protocols to integrate us. And certainly with the DIA Oracle, it enables a lot of more integrations now than we did before. But the combination of the DIA Oracle as well as these newer ZK Oracles that we'll be pioneering, we're hoping will usher in a new wave of growth for like the long tail of LSTs, meta LSTs such as Unsheath, as well as some of our competitors such as Yearn ETH or Origin ETH, as well as structured products that are based on essentially various indices of ETH and being like rehypothecated in DeFi. An example of this is Sommeliers Real Yield ETH product. And then I think the next big thing is a sort of with Eigenlayer, everyone's staking their LST. So there's opportunity and protocols already working on basically call it like liquid restaking wrappers, or essentially taking LST eigenlayer deposits and essentially making it liquid with a wrapper. And so unsheath will be involved in that in various aspects. At a minimum, being able to accept liquid restake tokens, valuing them, and potentially putting them into unsheath. So I think there's just a lot of opportunity with like newer LSTs coming up. Like we're just focused on sort of hardening our technical infrastructure, developing new technical products, and really using the opportunity to build in the bear, so that when sort of all the inflows comes in, when all the Ethereum ETFs come in and all the money comes into staking ETH, Unshield will be there to sort of take it all.
Absolutely. I love those sort of forward-looking, motivating words that you have there. And I think it's also exciting to hear that a lot of the teams that you mentioned are actually teams that we're chatting with as well, exploring collaborations and more to come on that. I want to also, Wagmi, now that you've shared more insights into this, approach towards fair value pricing, as you reference, like continue to explore how we might be able to take our collaboration to the next level between DIA and between Unsheath as well, seeing how we can further the pricing of these assets and just further improve the utility across chains for liquid stake tokens. As you mentioned, getting everything in order, building in the bear. That's a phrase I haven't heard in maybe a few months, and I'm glad you brought it back. It's certainly important to get all of this, the infrastructure for these applications sort of complete and built out before we see a lot more of the market volume come back into play. So I
Well,
think that's yeah.
well, according to the timeline, the bull market started today, so
Well,
we
today
just gotta be ready.
or last night. Not sure, but I was certainly refreshing a lot last night, feeling this like energy I haven't felt in quite some time. So that's NFA. I'm just from my own perspective, that's pretty funny stuff. Yeah. Hopefully it definitely seems like there's some new volume going on in the market right now that we haven't seen in some time. I'm sure everybody in the audience has a smile on their face listening to this part. But let's transition here. I want to be respectful of your time, of everybody who's been so attentive in the audience. Thanks everybody for listening. Let's just do some closing remarks here, Wagmi. Like, is there anything that we missed, that I missed in terms of asking questions? Any additional insights, updates, or topics that you'd like to discuss? Or otherwise, if not, maybe you can give our audience some background on how to stay in touch with Unsheath. What resources would you recommend they check out after this to learn more?
Awesome. Yeah, thank you for those closing remarks. Yeah, so I think we pretty much covered it all. I mean, pretty much in terms of following Unsheath, I would highly recommend you guys, follow our Twitter. You could follow, my page, Wagmi, and then please feel free to enter into our Discord and ask any questions that you have about the protocol. If you have any spare ETH, you can of course, stake it into Unsheath. uh, go to our website and there's our docs. You can feel free to take a look and come into our Discord and ask questions. That's all fine. And then, or there's always people who speculate on the governance token. So that's certainly available. We're listed on a couple of centralized exchanges and have DEX liquidity for that as well. So yeah, I mean, the best thing I would say is follow our Twitter, get into our Discord, and if you have any questions that you'd like to reach out to me personally, feel free to shoot me a DM. I check these occasionally on Twitter, but I will be sure to check them later today. And yeah,
Wagmi, it seems that we have an audience question here. Would you be open for the challenge of
sure.
taking this on? Okay, cool. Victor, I see you've requested. Let's bring you up on stage. Please remember, we try to keep this family friendly in terms of language and everything, but let's bring you up. Let's give it about a few minutes here to get an audience question, which is always valuable to hear, what people are wondering after the call. Victor, welcome on stage.
Hello,
You're
sir.
on
Can you
mute.
hear me?
Yes, loud and clear.
Can I ask my question?
Yes, please. That'd be great.
Yeah, my question is, what is your upcoming update development and plan? How to generate income? What is your revenue model?
So, yeah, so Wagmi, did you catch that? He's asking for upcoming development plans and what is the revenue model more specifically?
Yeah.
Yeah, I mean, yeah. Development roadmap is what I described earlier on the call, which is essentially pursuing growth on Sheets VL through DeFi integrations, such as those enabled by the DIA Oracle. And then our revenue plan primarily right now coming in from LSP protocols, providing co-incentives to our token stakers in order to be part of the Unsheath basket. But we also have the ability to turn on protocol fees through governance to collect a share of the various fees that are collected by the protocol, which includes swap fees, deposit fees, and redemption fees into the Unsheath basket.
Thank you, Wagmi. Thank you, Victor. Victor, I see that you hopped off stage. If you have any questions, I want to be respectful of everybody's time here. So, as Wagmi said, feel free to reach out to him. Sorry to throw that out there, Wagmi, but that's what you said. For any questions, I guess you mentioned the best way to be in touch would be to DM you, or what would you recommend?
Best way to ask any protocol-related questions would be to hop into our Discord and sort of, check out our support channel, suggestion channel, or open. If you want to talk to me something about something that's not Unsheath specific, then feel free to shoot me a DM. That's all.
Excellent. Okay, well, thank you. And thanks for hopping on from the audience, Victor. At that, I'd like to say thank you so much to Wagmi and to the UnshETH team. It's been a pleasure collaborating with you guys. And based on this exciting discussion, I'm, optimistic. I think it's only the beginning of where we can continue to take this and furthering utility for LST assets. Thank you, everybody who listened in the audience. Make sure to go ahead and give the UnshETH team and Wagmi here a follow. And thanks for joining in on our Partner in Focus session number 3. Wagmi, have a great rest of your day. Hopefully this is only the beginning of positive price action for you and everybody else as well. And thanks a lot for hopping on.
Everyone, bye.
Excellent. Take care, everybody, and we'll see you on the next episode. Bye-bye.